All right, welcome back inside our proactive newsroom. And joining me now is Alexander Scanlon. He is the managing director for Barton Gold. And Alex, good to see you again. How are you?
Doing well. Thank you for having us back.
Yeah, good to have you back. And the company is out now with your initial scoping study for the Tunkillia Gold Project. So let's talk about that first. Remind everyone a bit about the project itself and sort of the work that went into producing this report.
Yeah, so like Barton Gold, as a strategic thesis, is about consolidating a very large historical gold region and then accelerating a few key projects through commercial gates and then scaling for size over time. So for us, what we really focused with our Tunkillia project was actually accelerating and creating a large scale base of mineralization that we could hopefully demonstrate produces gold very efficiently at scale, and then set about continuing to scale that. So the Tunkillia project itself, during the past 3 years, we have sort of taken it from acquisition and proof of concept in terms of a large scale footprint to a 1.5 million ounce resource. We delivered that 1.5 millionth ounce in March of this year, and then we went immediately into scoping studies. And so what we have now done is to deliver a scoping study that demonstrates or tests the project on the basis of a 5 million ton per annum bulk open pit mining and throughput operation with a standard CIP plant. And what it demonstrates is an average production of about 130,000 ounces per annum at a very competitive cost of around $1,917 Australian on an all-in sustaining cost basis. So that would rank the project in operation today amongst Australian producers, about number 17 of 47 producers that report AISC. So already coming out in that sort of top tercile. And now we get on to the work of optimizing these results. So what have we done that was conservative, that we can bring operating costs in? What have we done that was conservative? We can bring capital costs in. And then how does that allow us to expand and use more of the resource as well as additional exploration to continue growing the overall resource?
And you mentioned just the numbers being competitive, and they really were. Obviously, a quick payback period, just under 2 years on, and considering it's a over 6 year mine life. So it sounds like even though the numbers were conservative, it seems like they're quite good.
Yeah, absolutely. So, I mean, again, using some very conservative assumptions, as you probably well know, you sort of start by modeling what your processing costs will be, and then that tells you how much money you have to play with on the mining side, and then based on that, you can optimize your pit. So, we've actually only used about 60% of the resource at Tunkillia. Only about 30 million tons of about 50 million tons makes it into this mine plan. So when we look at this, that's how we get to kind of a 6.5 year mine life. But as we tighten and optimize those numbers, we would hope to actually be able to stretch into something that's more like a 7 to 8 year mine life on the existing resource. And then that would take us to something that looks like a more sort of long life, large scale project, and really improve those numbers. We've got about a 40% IRR based only on that 6 year operation. So hopefully we would expect to see that expand with a few extra years, as well as the net present value and then the overall ounces produced and free cash flow produced.
Yeah, you mentioned in the report talking about expansion and some work that you can do sort of right away
Mhm.
to help in improving that scoping study. So can you talk a bit about that? Because as you mentioned earlier in the interview, you're using a small portion of what is there already.
Yeah, so like one of the really important tests for us, or I guess one of the really important factors to think about is essentially energy consumption. And that's
Yeah.
energy consumption in the crushing and grinding. So the comminution circuit, right? So we've taken a very kind of baseline approach of saying, okay, let's assume some pretty conservative approaches here. Let's assume single stage crushing, and let's assume all the historical test work that we've taken, we use the very worst numbers in terms of the hardness of the material. So we've used a bond rod mill and ball work mill index of around 25 and 26. And those are actually from the very hardest materials ever tested in the project, but those don't actually represent any material or meaningful input. They represent about 1% of the feed that goes to the mill. They're actually from a mafic dike unit, a mafic unit. So the actual weighted average bond work index is probably closer to 20. which would mean
Mm.
if you think about the way these mines and processing centers operate, they're really about blast, lift, move, crush, and grind. And the harder the material, the more you have to tumble it to grind it, and well, the harder it is to grind. So if we are able to basically pull back those numbers and say the average work index is 20 or 21 instead of 25 or 26, that dramatically reduces the effort required to grind. It dramatically reduces the power consumption. And the power consumption is about
Yeah.
50% of the actual processing cost if we think about the input type. So just focusing on things like that, the comminution, optimizing the metallurgy, that can have effects both on the direct power consumption. It can also have direct reductions in the cost of consumables. As that sort of processing cost comes down, it leaves more capital, if you will, in the optimization from mining costs, and that directly allows you to expand the actual size of the pit and capture more of the resources, in particular, more of the indicated resources. Plus, we will
Mm.
also do some more drilling to see if there aren't some smart holes we can do to sort of basically expand and tie in more of the resource and create a more efficient operation all the way around.
Absolutely. Well, it was an interesting report and to get better as well, and lots of work ahead. So, Alexander, thanks so much for the update. Really appreciate it, and good to see you again.
Yeah, thank you very much for having us.
All right, Alexander Scanlon, the managing director of Barton Gold.